Citibank has kind of taken the price prediction crown. But I think that we're going to have more banks who are going to be competing with each other to come up with higher and higher price predictions. But none of them are going to be capture the ultimate bull market number, because remember, Bitcoin has no top because fiat money has no bottom.
There are tons and tons of scammers with price predictions for Bitcoin, but there's only a few that know what they're talking about. There's people like Paul Tudor Jones, there are people like Stan Druckenmiller, and there are people like Max Keiser. Max Keiser has had a price target of 28,000 in the near term for quite a while. Back, in 2011 or 12, you said it might go to 100,000. Citibank is now looking at it. Their Forex strategist is looking at it and says that Bitcoin price to reach $318,000 by December 2021 as the new gold. Citibank director says Bitcoin's market cycles are becoming larger, and the current bull trend could take it to $318,000 by December 2021, predicted a managing director at Citibank. He says this bull market started in 2018, that the bull markets in Bitcoin have been getting longer and longer each cycle. And so this is why, just based on comparing it to previous cycles and then being conservative about how much it's going to go up compared to previous cycles in the Bitcoin markets since 2009, he's predicting a price of 318,000 just based on a conservative estimate compared to previous trends.
Right, and he also said that he's looking for the dollar to have a sharp move down, right? So these two things go together. And because fiat money is something from the 20th century, the 19th century, the 18th century, and it's being disintermediated or disrupted by Bitcoin, which offers perfect price discovery. The price of Bitcoin is perfect. It mimics nature in that way. It's like the photosynthesis of money. It's a perfect price discovery, the perfect market maker between risk and reward, between consciousness and humanity. It's absolutely perfect. And that's why people are running to it now and eschewing fiat money.
This managing director of Citibank says is uniquely makes it so good. He says Bitcoin is the new gold. It is an asset with limited supply. It is digital. This is the 21st century. Gold is a 20th century asset. It moves across borders easily, and ownership is opaque. The last point is, I believe, very relevant. The huge fiscal deterioration of today has a cost in the future, either directly or indirectly. Directly, it is that at some point the bills have to be paid, which means at some time in the future, the money needs to be found. While Bitcoin may become subject to more regulatory constraints going forward, it is a natural store of money to avoid this. Indirectly, the argument can be the debasement of fiat currencies by creating high nominal growth and inflation, effectively a soft default. I do not believe hard default, particularly in the world's reserve currency, is a real concern. However, in lesser currencies, it could well be.
The word unconfiscatable is key, but before getting into that, just mention, talking about defaults. Remember in 1971, America defaulted on its sovereign debt when it closed the gold window. So another default on the US dollar, it's highly likely. But this word unconfiscatable is important because what it means is that any two people in the world can transact without having to go through a third party. And that means that not only is Bitcoin unconfiscatable, but it's also uncensorable. There's nothing that stops any two people in the world from transacting at any time. What that means is perfect price discovery. It reflects the perfect sum total of all goods and services as subjectively valued by all humans on planet Earth every second of every day. Whenever you put an intermediary in there, like a bank or a country, the fiat money is state money, and the other forms of credit are bank money. But if you do get rid of all that, you just have direct one-on-one or 1 to a billion commerce happening simultaneously globally, you have peace. Actually, is the ultimate upside of Bitcoin is that it's peace versus fiat money. Because it's a Ponzi scheme, it always favors war.
But it's important to remember what he mentions fiscal deterioration and inflation. And when he's talking to Citibank wealth clients, or JP Morgan is talking to their high net worth individuals, or Fidelity is talking to their high net worth individuals, what these family offices and very wealthy people are concerned about is not speculation and money go up, money number go up. They're concerned about retaining and keeping their wealth. for the next generation or two. So they want to not lose that wealth. So confiscation is often and usually done in the modern era through money printing, through inflation. So he's saying that this is like better than gold in terms of your wealth is not confiscatable through inflation, but through, in the case of gold in the United States, that's already been confiscated in the past, and it obviously could be done again. He also mentions that, that the Bitcoin's going to stand out in this world of CBDCs, so the central bank digital currencies versus gold. And he says this is a double-edged sword. On one side, CBDC, the central bank digital currency, creates a much more effective mechanism for distributing stimulus, particularly fiscal. But on the other side, it also makes capital confiscation easier. For example, negative interest rates. Both these scenarios would look to me to be positive Bitcoin, and in the 21st century, give us the digital equivalent, Bitcoin versus fiat digital, of what we saw in the 20th century when the financial regime changed, gold versus fiat paper. We said this quite a while ago, that this is a sort of moment of like 1971 when we went off the gold standard, and in terms of just a huge regime change. And in terms of the wealth confiscation, the negative interest rates get hit hardest to those who have savings in the savings account. If you look throughout Europe where they have applied negative interest rates to deposits in the banks, it's mostly been people over 100,000 euros who are hit with these negative interest rates. So they're the ones that are going to be driving into gold and especially into Bitcoin.
A lot of the people in the other financial press was talking about it in terms of, well, this is going to compete with Bitcoin. But as we said at the time, and as now Citibank is agreeing with us, that it actually causes people to panic buy Bitcoin because they realize that the central bank digital currency will just be a way to, one, inflate the value of the money, or Michael Saylor calls it the melting ice cube, and B, gives them easier ways to confiscate wealth. So now there's a panic buy of Bitcoin, and we're seeing that in the price action. The price action is reflecting panic buying, and that panic buying is going to continue for a while.
So we're going to turn to an opinion that keeps on being wrong over and over. When Bitcoin market prices were at $1, at $10, at $100, at $1,000, at $10,000, at $20,000. He's always wrong, and that is Peter Schiff. The recent rise of Bitcoin relative to gold in no way proves that Bitcoin is a superior store of value. Exuberant investors are flocking to risk assets and shunning safe havens worldwide. As the riskiest asset of them all, Bitcoin is being bought as part of the risk-on trade.
Well, Peter Schiff and Ray Dalio should open up a pub somewhere in the middle of nowhere and cry in their beer all day long because they messed up so badly.